So it's my pleasure to introduce the esteemed panelists for the FinTech panel today. John Langston is the managing partner at the Republic Capital Group. And Ron Dvari is executive chairman and chief investment officer, as well as the co-founder at the NewOak. And I'm so happy to see both of you here today. Apologies, I'm on Zoom. I would have loved to make a quick trip to Texas, maybe next time. It's great to see you. And I'm going to start by asking you to introduce yourselves and talk just a little bit about your background. Not too long, but just relevant. Give us some relevant facts and set the stage for your views on FinTech today. Please go ahead.
Okay, maybe I'll go first then. Thank you. Appreciate it very much. Ron Dvory, thank you, Marty. Thank you for doing this panel. It's not the first time I'm doing it, so we're very much familiar with the format. But I do have some new things to talk about today, perhaps. General background, I am essentially a financial engineer geek. Started out in engineering, went into financial engineering for legally, I guess I did most of my career at BlackRock, building out the financial engineering that ultimately led to us being be able to distinguish ourselves during the credit crisis and be able to provide transparency to very complex strategies that were built on, highly layered and highly non-transparent collateral underneath. So with that, in 2008, I think I found, that's, if I'm looking for something inefficient, this has got to be it. Right? Every single bank, every single institution, every single participant sort of missed it. And so those are the type of opportunities that don't come about so much. And so the opportunity there was for us to bring transparency to highly liquid, initially private debt instruments that go into various trusts, whether private or securitized. And that has led me to FinTech in the sense that essentially in order to make things transparent, you need all sorts of technology underneath to bring how that asset was originated, how it was put together, how it was glued together, and really identify the structure. And then today, we have now coupled that with what I consider e-commerce and all sorts of other infrastructures that allow us to go into B2B2C, essentially business to business to consumer. That's really just the general road, and I'm very fortunate that I've been at the right place at the right time throughout my career to be able to ride the wave.
That's great. Thank you so much, John. Would you kindly introduce yourself and Republic Capital Group?
Sure. Thank you, Julia, and thank you, Marty, for this opportunity. Great to see everybody here. For the benefit of the audience, Julia is to our left, and we have another audience to our right. So Ron and I are we're just trying to address everybody. So thank you for that. It's a real pleasure to be here. My background is in financial services. Just out of college, I started in the financial advisory world. Took a break from that, went into nonprofit world for a bit, but came back, did an MBA, and started working with financial services companies, primarily in the asset management, wealth management space around the U.S. and working in terms of transactions and capital raise for private investments. Today, I'm the founder and managing partner of Republic Capital Group. The firm will be 7 years old in September. Our expertise is in working with independent wealth and asset management and fintech firms. I am also a board member of Creative Mass. Creative Mass is a wealth management software. It is the #1 wealth management software globally on Salesforce in terms of adoption. So it's a newer company, but very exciting growth and lots of development there. So, but our expertise is in investment banking for these independent wealth and asset management firms, as well as the fintech space. So great to be here. Thank you.
Wonderful. Ron, you mentioned in your opening statement that there is something new that you wanted to talk about as far as the NewOak is concerned. But before we get to something new, would you talk to us just a little bit about the future of payment, how important that new fintech infrastructure, that is the foundation and the pipes that's included in every single fintech app is, and can you give us an overview of what NewOak does and then what is new?
I think, for a long time, as you know, credit cards and debit cards were probably the most, I think, impactful financial instrument that innovation that an average person would
Yep.
experience.
Yep.
After being able to do a checking account and saving account, these were what every person would be familiar with.
Yep.
But what they also didn't recognize was the highways that these were built on. It was really ultimately ended up being effectively managed and controlled by limited number of companies. And most of us know the biggest interchange. If you look at the back of your debit card or credit card, you see those symbols. There comes along, the e-commerce. There comes along, things like Shopify or Magento, or and on the other side comes Plaid and MX and other tools that essentially gives you a very trustworthy network to be able to connect to the merchant, and then the merchant obviously is connecting to the consumer on the web, and so on and so forth. The first wave of essentially providing financial, essentially bypassing the banks, if you will, was ended up, lending clubs of the world, which was essentially what they envisioned as a P2P, person to person, ended up being really hedge fund to person a platform, but it was a one-time interaction. These have lasted, and this is new. You're looking at, literally less than 10 to 12 years. As I think it was mentioned, I think the knowledge was expanding like now every 7 hours, which I cannot believe that yet, but I do believe that this is the age of information, and data is the key, and that data is currently very much available. So I think roughly about 4 years ago, we embarked on what I consider, how can we actually create a more efficient, more membership-based revolving credit, bypassing these networks where we actually have a ongoing conversation and relationship with both the borrower and merchant. So we are both merchant-centric as well as the consumer-centric, the end user. And I think, any merchant you speak to, in some ways, hate both Amazon and hate, essentially the MasterCard and Visa. You look at the lawsuits that are going on. So in the new world, the trust is the key thing, right? The reason people use these because, if somebody is stick a card in the machine, the merchant didn't really want to do due diligence, right? They want to be able to pay that card, finish the transaction. So we are now able to very efficiently to connect to merchants via their own website, really through API. So API has become a big thing nowadays, right? Widgets and APIs are out there, and they are well tested, and the banks effectively are using it, and they're allowing us to use it. So by them selling it to the banks and being able to talk to the core banking, we then can leverage on that and start building what I consider the non-bank finance under the sponsorship banks to do that. So this is not so new, but it is the beginning of how you can create data lakes, information, get closer to your merchant, get closer to your customer, understand
Mhm.
behavior, and use the power of data science that we have always been, and in fact, be able to provide customized products to the masses. And I go back to my early days when I was in aerospace and designing planes.
Mhm.
You know, how can I create, or in auto, you want to be able to create mass customized. How can you mass customize products? This
Mhm.
is the age of mass customization and really ultimately satisfying that relationship of B2B2C. And I think we're along the newer things we're going to talk about, not now. When you ask that question again, I want to give it another dimensionality. Then you start seeing the multidimensionality of this when it's not controlled by a channel that is not really giving that data back to you to use.
Mhm. Thank you. I like you mentioning mass customization. There's also a humongous drive to reduce cost, right? To recreate kind of similar, better functionality at a lower cost. So we'll come back to you in the next round for what is new. But for now, John, you mentioned that you are on the board of Creative Mass. You mentioned that it works off of the Salesforce platform, which is extremely widely used. Can you talk to us just a little bit about how Creative Mass is different? And also, if you see certain trends that we just mentioned play out in that particular area, and what new trends you actually see?
Yeah, thank you, Julia. I think what's really interesting from my perspective, and when you talk about fintech, obviously that covers a great deal of areas. My particular focus and experience is around financial services organizations that are looking for ways to respond to what we're seeing, particularly in the independent wealth asset management world, the insurance world. We're seeing a lot of convergence of services. An example I will give, and to add to the wealth or to the Creative Mass story, we're actually an investor in the firm as well. We made an investment about 3 years ago. But ultimately, what we see in our world is companies tend to have 5 or 6 software solutions to serve their embedded client base. And you're talking about trillions of dollars, many, many clients. And so I see a tremendous opportunity in fintech around connecting and reducing the number of those services or those solutions that companies are trying to use to serve their clients. The reason I'm fascinated about it is that you already have a built-in client base. You already have thousands of clients. There's already millions and millions of dollars of revenue for, in this case, we'll use Creative Mass as an example. To be clear, I think there are other opportunities that are very exciting, but Creative Mass saw that typical independent wealth or asset management firm or a number of insurance companies, mortgage companies were having to use 5 or 6 software solutions to serve the clients. And so Creative Mass said, why don't we develop a solution that will allow these companies to reduce how they serve the client, everything from reporting, account balances, communications, compliance, regulatory frameworks, all types of things. Why don't we integrate something that would allow these companies to move from 5 or 6 solutions to 1 or 2? When I saw the solution myself, I said, wow, every client I've ever dealt with had at least 5 or 6 software solutions. This is a real need. And so going back 3 years ago when it was just there were some clients, but it was more of an idea, right? We were an early investor. So what you see is what Creative Mass does is allow companies to reduce the number of solutions they're using. And again, everything from reporting, all the pieces that are needed to serve that client. So it's a fascinating trend. And what's interesting about what I refer to as sort of the independent world, and I'm setting aside the wirehouses, other large groups like that. Although we're seeing some fintech opportunities there, I would point to an iCapital. A lot of people probably are familiar with iCapital.
Yeah.
It must have been 6 or 7. Oh gosh, it would have been 7 or 8 years ago. I flew to New York and met with Lawrence Calcano, if you know iCapital, and came back, and at that time was a portfolio company of a large global PE firm. And I said, you guys have got to look at iCapital. They are solving a technological problem of how to connect these clients and services around private investment. So that would be when I think about fintech, sometimes, we all tend to orient toward payments or crypto, but within the entire financial services structure, there is significant opportunity to sort of solve problems, and you have, big revenue streams, big client bases. So it's intriguing to me, right, that you don't have to build those things too, but you need to have a solution. But that's what Creative Mass, addresses, is this need. But what I was going to say is a lot of the independent companies in our world don't have legacy technology solutions, so they're able to implement and do things quicker than say, for example, a Morgan Stanley or someone like that. That being said, Creative Mass is serving some of the largest wirehouse or largest financial investment firms in the world today. So they're able to cross that bridge. But it's interesting, and I think it's an exciting window, or I should say a particular part of fintech that has us pretty excited.
So in consolidation of the software features, do you feel that you could provide the mass customization that Ron was just mentioning a minute ago?
Yeah, no, I think that's part of the opportunity and challenge, right? We certainly feel like, and again, I'm using Creative Mass as an example for folks, but we certainly feel like that is part of the solution, right? That there's both this desire to streamline and reduce the number of portals that are being used, but to customize it to the client. And again, I think that's part of the opportunity, and challenge, frankly. And in terms of consolidation, I would say I really believe if you look at use the wirehouse world, for example, you see the reduction of numbers of there. If you look at large CPA firms, we've seen a consolidation there. We think that you're going to continue to see that, and you're going to see a cross-pollination of services. We are currently working with one of the top 5 largest independent asset or wealth management firms in the country, who is actively working to acquire a very large CPA firm because the services are broad and that they're delivering to clients. Julia, I have a hand raised out in the audience. Can I just take that question?
Yes,
or
yes,
do we have to wait? Sorry.
Oh, you have to wait.
For independent advisors, how many vendors are they using now, either speaking direct or generically? Who are they using? For your single source solution, how much time will that save?
Yeah, it's a good question. I would say on average, there's 5 to 6 solutions, on average, plus or minus. It would be things like, reporting, would be things like, portfolio rebalancing, CRM, a number of those different things. What we found in practice is that Creative Mass typically can help a company get to 1 to 2 solutions. Generally what happens, and again, speaking in part from kind of an independent lens, as a company develops and adds different software solutions, there's usually one very specialized, very specific solution they don't want to give up, but the others are more general, generic, and so we're able to come in and, again, in the example of Creative Mass, plug that in and get them to 2 solutions from 5 or 6. And obviously, it makes things much more efficient. There's some cost savings. But also in terms of just staff training and being able to bring in someone into the mix as the firm grows, obviously understanding how to use 1 or 2 solutions is far more efficient than 5 or 6. So, and then from a growth standpoint, from a creative standpoint, the firm today is about $8 million in annual run rate revenue, with about $100 million in annual run rate in the sales pipeline. So we are rapidly moving towards sort of a level that we think an IPO would be attractive. So.
John, I want to go back to Ron for a second, but before I do that, I have a question for both of you. How do you solve, obviously having one platform as opposed to the Frankenstein way of connecting 20 different things together with tape is more efficient. But as you know, there is an organizational and people aspect of buying software. So someone who's using a CRM is going to say, I don't want this CRM, I want another CRM. And why do I have to sacrifice what I prefer for the sake of us having one application? And I want to hear both of you answer that, because Ron is coming out of the BlackRock environment where Aladdin was the end-to-end system and you could choose no other. And it's a part of the DNA of a firm to have kind of one platform, and anyone who, any smaller companies that were acquired would just put on that platform and that's it. But it's a huge organizational and cultural issue, in my experience in financial services firms, where each team wants to pick their own. So how do you solve that? And it's a question to both of you, and You can, John, you can go first, or Ron, you can go first, however you want to do it.
We have, I think we are looking at what is called single source of truth, right?
Mhm.
And single source of truth is a very key word, and it's not currently, not every organization is able to create what is called a fully synchronized database at every second that they could trust.
Mhm.
That if you're using multiple applications, your sales and marketing people are using different tools. They may, in different countries use different applications. There will be different set of laws that apply, right?
Mhm.
But ultimately, the data from that ultimately goes into a form of database, which is what's called NoSQL. Essentially, massive amount of data that is gathered up, and essentially you're not overwriting things. You got to pick so the sequencing is there, but it's not really structured. Then you go into metadata and you build that up into now tools that are extremely efficient in terms of creating these knowledge base that is searchable. And now you can train people with higher level languages, no code, low code, essentially ability to build applications in matter of minutes, test them, and then put it back to use, change the nodes, say from this point, you need approval of this guy, that guy, these rules apply, and those rules apply. This kind of environment, in order to get something like that at Morgan Stanley or Bank of America, you need an act of God to get that done. I remember when I was at McDonnell Douglas and Boeing, we used to say it takes about 1,000 signatures to change the toilet seat of an airplane. And it really did. You had to go to around every single department to do that. If it was a defense, that would be about 10,000 signatures if it was selling it to the Army. But because of our regulatory environment and traceability and ability to show, now you have a situation where, essentially the old setup, essentially historically built sequences and workflows don't apply. So, by the way, I just want to correct John when he said B2B2C doesn't involve payment system alone. We found, for example, startups show up and start talking about, for example, cybersecurity. Within months, they find out they need an army to handle cybersecurity by itself, just by itself, because they're changing things. And so all of a sudden they become not compliant with, SOC 2 or whether other things. And then they find out as a young organization, if they don't have really a set of tools that are just provided to them, and that's the exciting opportunity that we were providing, how can you take these services, add them together, build it on data lakes, and then effectively be able to mass customize it to individual applications, whether it's, handling, a investment product of a company, so the source can come from anywhere and it can integrate to the lake. So that's really what I think the new thing is about, and have Datadog. Datadog is actually a product to watch, what's going on, who's putting data, who's pulling the data out, and have Databricks, which are controlling essentially your procedures, right? And the banks found that majority of their assets are within Excel sheets, hidden. The data never made it to a central database. And all of a sudden, I've talked to a major bank who said that when it comes down to stress testing, it is their nightmare because they cannot validate the data. How can they go from there, right? And that's where we think the new age is going to be an opportunity. Now, on top of that, add other requirements, which is my excitement, which is ESG. The ESG is going to be law of land as opposed to, within 5 to 10 years, other Europeans are imposing that on companies. I have to admit, the banks will be subject to that, whether they like it or not, by pressures from investors. And now you add that into another dimension, obviously you're creating a great opportunity for new total solutions. And that's the thing, what we consider the future of fintech, embedded finance within processes that are flexible and agile, use your word. How do you do that? How do you get there? And you don't start from the old, you start from new. Again, it's not about crypto. It's not about, because all of these things are another tool in the box. It doesn't solve what I consider what BlackRock created the high rates for themselves and maintain those high rates, and they could actually, do that. But they solved it for what I consider limited, not limited. Managing people's liquid assets is very important. But then when you go beyond that, which is about 70% of other assets of the world, how do you do it?
Very true. John, would you like to add?
Yeah. So look, I think this is obviously one of the most complex questions there is. I will tell you that the way we addressed it in thinking about creative mass was the idea was to build what we would describe as an 80% solution, right, with the variability built into the solution. I think for companies going down this path, that may be a decision they need to make. Are they going to, develop something that has the type of customization that Ron is talking about, which is, beyond my experience or expertise, or are they going to develop something that is an 80% solution that can be molded and adjusted for a lot of applications? I mean, part of the impetus in our thinking, and again, using creative mass as an example, was that we saw some highly specialized or some solutions that had what we might describe as the Ferrari approach, which is obviously very appealing and very just outstanding. But we found that day-to-day users were not using a lot of those types of features in the same way that most of us might not purchase a Ferrari in terms of if we wanted to carry 3 or 4 people. I have 4 kids, so that's the only reason I didn't, just to be clear. But the utility, right? And so I think there's this utility question in developing some of these solutions. And our thought process was to make it more of a utility 4-door, perhaps SUV or 4-door vehicle, right? And I think that's part of a decision that companies and opportunities have to make. But we were firmly in what I would call the utility camp of build something that has a lot of utility, significant customization, perhaps, but not perfect customization, if you will.
Got it. So what do you think about the hybrid approach where something is 80% there and then each company builds around it and does customization at the company level? What do you think about that approach? And do you think it's one of the latest trends, or how do you see that?
Yeah, I would say that's what the approach we took, and that from my perspective makes a lot of sense, particularly in where you're serving clients who have different outcomes they desire, right? Because the desire for customization in terms of the professionals we work with is all about pleasing the end client. So this, as you describe it, hybrid approach is something I think makes a lot of sense. I think ultimately we all at times have this dream of this will fit every solution or every scenario, but it's really not. In the complexity we live in, it's very difficult, I think, to achieve that. But I think this idea of an 80%, and when I say 80% solution, I don't mean that it's incomplete. I just mean that 80% of the time it's highly effective for every situation, and then allow each company to customize. That's what we've done in sort of building this business. Again, using creative mass as an example, I think there are many other great examples, many other great opportunities. But that's the approach we've taken to allow that customization at the company level.
Ron, what is your view?
And what John is saying is not very different than it's a Lego approach, right? Again, right? It's a Lego approach. You're not really building a Ferrari, and you're not building an airplane, and you're not building a 4-wheel drive. You're looking at what you're trying to build and figure out the bricks. And that's why I mentioned, the data bricks and Datadog and all that. So you need to put those back to what I consider single source of truth data that you can validate and trust. And then you need to have what I consider a set of tools for people who understand how to build algorithms that are not embedded in Excel sheets and embedded in their emails, embedded in messages, embedded in phone calls, and bring that to the level where effectively you can see what is the workflow, what is the data coming in, and what is the provenance on that data, or the information that's coming in, who's approving it, who is letting it go forward, and where is it stuck. So most organizations have no idea where it's stuck. When my banker at my own bank decided to take a few weeks off, every request I had was stuck. right?
Yes.
Right? Everything, including my application for credit card, application for new bank. Nobody knew exactly what it was. And frankly, for the bank to solve that problem, it required a lot of
That's a great example.
reshaping. It's incredible that, you know, people do not have a dashboard of what's working, keeping everybody informed. What is,
Yeah.
no, in client onboarding, for example, you'll see that's where you turn off. The
Great
client right there, you lose them.
Yep.
Because they see Joe
You
called
feel
you
like
for
you're
the-
brand new and you're like, if I'm not getting good service now, you know, what's
Yeah,
gonna be?
I get the data to Joe, but Joe didn't tell Jim, Jim didn't tell John.
Yes, that's exactly right.
And John on vacation, we got Jewish holidays coming up.
Yes.
And you know what? You know, it's really, it's your typical situation where, you know, by the way, this is not new. The auto industry solved that problem way back. And the aerospace industry, finance is trying to learn that look, you know, you're building a machine, you're building a car.
Yeah.
Whether the car is customized or not, every service has a workflow. If you don't know what you're doing, nobody else will. So, and that's really what we found, that in dealing with when you really get into the uneducated customer, you can easily frustrate them. And that's why you can't issue a new offer or a new credit card or a new mortgage or a new, whatever it is that you're trying to do. And frankly, also the private equity firms are learning private debt is not as easy as they thought. But it is the most challenging problem for them because the data that they're getting every month, you know, they come up with a very complex set of terms that they need to monitor. And guess what? They have to put a $500,000 guy to keep after, maybe a $10 million loan, and that doesn't work. Ultimately, you're going to find out that just, you can't have one guy only handling five loans. So the scalability in private debt is one of the biggest issues.
Hey, Julie, we've got about 2 minutes. Can we get to some questions from the audience?
Yes, absolutely. Questions from the audience, please.
Any questions about fintech from the audience? I have a couple. Right. So I guess that in the world of Web 3.0, what's the purpose of, how is fintech going to fit into that? Have you guys had any thoughts? Right. There's going to be a whole bunch of autonomous things. I mean, I actually have to go give a lecture in Florida next week on this topic, right? Because to a bunch of lawyers, right? Because the whole issue is when you've got all these autonomous things, somebody's got to regulate them and see how they function, et cetera. And we've seen this in the crypto space over and over again, where we thought things were functioning fine, and then all of a sudden, billions of dollars of crypto disappeared here and there.
No, you look at, for example, what crypto has not solved yet. Oh, yes, sir.
Microphone.
Oh, yeah. Sorry. You look at that. Sorry, I was looking at the audience, not the real audience. When you look at the crypto world, right now, possession is 100% of the ownership, right? That means you have no proof of your ownership right after you lose your key. That's it, right? And if you keep it on chain, essentially you've lost and then you either trust it to a exchange, and if the exchange loses it or gets compromised, then you lose your assets. For what I understand, about 20% of crypto assets are actually either in the state of limbo, which ultimately people talk about, these assets are in the open ledger. They're not if you don't have the key, right? They are there, they're sitting there, or they're going into mixers and tumblers and being reintroduced into other forms and confused, or they're going off ramp and coming back on ramp. So those are the type of things, when we say autonomous, these my apologies. These systems have not really thought through the entire. Right.
Autonomous ring.
That's right. That's autonomous. Turn it off. It doesn't like to listen to my voice. But what I'm trying to say, the simple trusteeship of these assets and ability to be able to reset and reassert your ownership if you lost it has not been that. So that's the trust issue, right? Mm-hmm. And that's why I'm saying these. That's why I do believe we're far from being these systems and these assets becoming what I consider institutionalized and a norm, right? They're going to be used. They're going to be used in There's all sorts of applications that are being built, but we are in year one of what are considered 100-year journey that we're ahead of. Things are coming, but they're not here yet. But you have to get involved and get understanding. So we think blockchain is a tool, not a solution, not the final solution at the end. Ultimately, you need to really build the same way, in terms of building and satisfying your constituents. And that's really what ultimately, I think that ultimately you need to have an architecture.
Yeah, my thoughts, Marty, I'm particularly intrigued by the opportunity around helping existing financial services organizations managing trillions of dollars navigating to these new opportunities. I don't want to call it picks and shovels. There needs to be something else and more technology sounding in terms of, a bridge, a transfer. But I'm intrigued by that because you have existing assets, existing clients, you have existing corporate clients that are extremely well positioned in terms of revenue available to you that know they must cross into this new area of technology. But for example, there's the need to manage the regulatory framework, the technology backend, all of those things. I'm very intrigued by those type of opportunities, Marty, because I think that sometimes those are overlooked because they're not the newest, most exciting, clever idea, but they are a huge need because these larger organizations are going to migrate to these new things, but they need someone to help them get there. And typically are not going to have either the creativity or technology in-house to do that. And so outside companies can be a great source of solution. And I think a great area for family offices to think about deploying capital to.
I agree on the last one. It's an opportunity of lifetime.
Yes.
I think because again, this is a very beginning of a long way.
And you don't have to find the most creative idea. You need to find creative solutions to existing problems. The problems are clear. So.
And legacy, many of them.
Yes.
Ron and
Absolutely.
Ron, thank you so much for your time
Thank you.
today.